Wow, so cool. Oh, sorry, I moved it. Hey, testing. AV equipment. Hello, we're in P3 and there's no battery for the remote mic. No, the battery's empty. Yeah, thank you. P3, I think. Is it P3? This is the P3, right?
Sorry?
This is P3, yes?
Yeah, P3.
Yeah, good. Okay. Hey, good afternoon. Good afternoon. Let's see if we can learn something today. I've got lots of interesting things to do, and I don't know what's going to happen. I've got a phone call to make, and yeah, let's see what happens. For now, I want you to write down a question that you have. Anything about what you're learning so far. Can you all take 2 minutes to do that, please? A question that you have on your mind. Yeah. You know what I mean. Okay? You know what I mean. Can you take 2 minutes now to write a question? Write it quickly. Don't think too much. The longer you take, the more you let your emotions filter what you really want to ask. Okay? So write down what you want to know. Okay? Don't let your emotions get in the way, okay? All right? So we want... Who's coming to my talk tomorrow night? Oh, we've got 1, 2, 3, 4. Okay, there's 35 signed up. MBA students. So it's very popular. And most of them have 8 hours class that day. So must be a need, a demand. Okay, so you finish your question. What I want you to do is I'm going to ask for 3 people as we go to volunteer. So do we have any volunteers for a question? We've got 1, any more? Second, we're looking for number 2, please. Number 2, we've got 2 here. And number 3, 1 more. We need 1 more. Okay, 3. Okay, excellent. So remember, this is your time, not my time. Someone asked me, why do you video record? Actually, to tell you the truth, this is the last time I'm going to be teaching MA2 in Hong Kong U. So I want to have a memory. No, there's other reasons, but that's actually that's true. That's true. But oh, thank you. I think we need a battery for this. Thank you so much. Sorry. That's true. No, the real reason is if I can get it converted into a format so you can access it very fast, then you can have benefit. Okay, so we've got 3 questions here. So, hang on. I asked for 3 questions. You didn't put your hand up before. Okay, so... but I will reserve you to ask the first question next week. Thanks, fellas. All right, first question.
If value engineering is such a good medicine, why aren't all the companies doing it?
If value engineering is such good medicine, why aren't all companies doing it? Yeah. Most companies are doing some part of it, but they do not see the whole connection. They do not see how to exploit. Thank you so much. Thank you. Wonderful. They do not see the full power of doing everything, the three parts. That is linking marketing to how you design products. You know, I'll give you a real example. Okay, so I talked to a consultant. How do I know him? Because he's a friend of a friend of a friend, and I had nothing to do one afternoon in Shanghai about 12 months ago, and so I had afternoon tea with this guy. All right, he used to work for KPMG. His job was to help bring the marketing team, the product design, the production, the quality people all together onto the one page, thinking the same way for when they negotiate with the suppliers. Because the other 364 days of the year that the consultant wasn't there, they weren't exactly talking to each other. Okay, so companies, when I talk about value engineering, part of my message is that production needs to know what marketing is doing, needs to know what design's doing, needs to know what thing. Because the first part of value engineering is the functionality, price point, all right, which is really marketing. You have to have knowledge of the market. Okay. Number two was design, so you need to know engineering. Number three is process, then you need production, so you need to more talking together. So part of the reason why some companies don't do it in a full way is you could call it politics, or people don't talk together as much as they should. Okay, that's a very good question. Okay, Pima?
The midterm is scheduled for 2 weeks later, so I was wondering where, when, and what's covered.
The midterm will be here, and it will cover every subject taught in the first 4 weeks.
And it's the same time as that?
Same time as the lecture, yes. Next question? Yes.
What are the possible weakness, or if there is, or misconceptions about value engineering?
Wow. I need to think about that. What are the popular misconceptions about value engineering? Maybe the E in that word, engineering. So people think it's a domain of the engineering people in the organisation, and not the domain of marketing, and not the domain of production. Okay, so maybe that's one misconception. So value engineering requires all of those areas to work together. That's hard. It's hard. You go into any large organisation and they're in different silos. Okay. Yeah, but there may be others, but I need to think more. Very good question. Okay, so that's my policy. Every time you see me, write down a question you have in mind. I give the first three, put their hand up to ask a question, and if we have time, we can do it in the second hour. Right now, I've got 3 things to talk to you about today. The first thing I want to talk about is cost allocation, and how important did I say that? How important cost allocation is. What did I say last week? It's not important. Okay, it's not the medicine. That's cost allocation is not the medicine. It's not the thing you should be focusing on if you're trying to help a company turn around, do better. So now we come in this week, I say, no. What I said last week, don't believe everything I said last week. Okay? So now cost allocation is important. Why? Because it's the topic of this week. Well, it is. It's partly important. So very quickly, I have some PowerPoint slides here when I get the computer working. So I'm serious. I want a memory. Maybe you can have a memory. You can have a copy of this, and so when you graduate, you can say, oh, that was my lecture. Okay? So, how many of you would like that idea? No one. Oh, okay. All right. Okay. Well, the offer's there, and it doubles in price every year you don't ask for it, okay? What I'm going to do now, I just want to plug the computer in so it doesn't automatically turn off when I forget it's off. So we got activity-based management and we've got value engineering. Okay, this was a short interview I did for a Korean TV station. This was last year. They called me up about a month or two before I did it and said, oh, we want to talk to some expert in Hong Kong about financial services industry and how it's expanding in Asia and how it's going to affect, how Korea can use Hong Kong as a platform. And I didn't know much about what they wanted to know. And I said, okay, I'm the expert. So the point I made about that was, in 4 weeks' time, I will be the expert. And I did the interview and it went okay. Then they chopped out most of it when they put it into the post-production. That always happens. Okay, so let's turn this on and then we can move on. Okay, so we're going to talk about there's cost allocation, there's customer profitability analysis, and right at the end we're going to talk about sales variance analysis. Now, I've got a very important phone call to make. A very important phone call to make. I want to call someone, and the topic of that phone call is going to be about Learning Objective 4, Learning Objective 5, Learning Objective 6. Okay, I want to move on to that very quickly. Cost allocation, there's only two main things you need to know. What are the principles of cost allocation? Okay, what are the principles? And I'll just show you the two slides you can circle 10 times and take home and make sure you cover that reading, okay? So we're going to talk to Grace in a minute, all right? We're going to call Grace, and that's the cost of the one that clacks and rings. Last week we talked this in. This week we're over here. We're over here this week, okay? And we're going to talk about customer profitability analysis. Cost allocation. The purposes of cost allocation, this is in your textbook, so I don't want to cover that, but I want you to do a circle as a reminder to go back to the textbook and just cover those points. The purpose of the cost allocation is to information for economic decision making, to motivate people to properly have some evidence of accountability in the organisation, and to measure income and assets. So the 3 and 4 are the kind of auditing / financial type purposes. The first two are your two dominant purposes of management accounting. That is economic decision making and influencing others in the organisation. Let me repeat. The two dominant purposes of management accounting is to support economic decision making and to motivate people in the organisation. That is to influence others to do what you want them to do. Okay? So circle that and take that back. Make sure you cover that in your textbook. All right? The criteria. There are 4 criteria. That's in the textbook. But notice that cause and effect and benefits received, those two criteria are very, very similar. When you get a benefit from someone, do you not think that they did not incur any costs in giving you that benefit? I don't think that. I just did 3 double negatives. So do you understand what I just said? Do you not think that they did not incur any cost in giving you the benefit, like benefits received? Surely most departments or actors in the organisation have incurred some effort in giving you some benefit. So there must be some cost attached to that. So my point is, benefits received is very similar to cause and effect. Okay? Very similar. Okay? And fairness, equity, ability to bear, that may depend on how large the organisation is, like ability to the bear, or maybe you're the China unit, so we're going to allocate more cost to you. Why? Because you're growing 30% each year. Our European unit is going down 20% per year. Okay? Fairness, equity, that may be something what top management dictate as what they think is fair, what is not fair. Okay? But the dominant criteria is the first two. Cause and effect, benefits received. Okay. Put your hand up if you paid your school fees. Okay. Put your hand up if did you empty out the rubbish since you've been at school? You've been here today in the last week. The rubbish has been emptied, right? So you got a benefit, yes? No? You got a benefit. You don't have a smelly room. Someone gave you a benefit. There's a cost associated with that. So that's my point. You receive a benefit, but there's always a cause and effect there somewhere. You with me? Some of your school fees went towards the wages of someone that cleaned the bin to make this room clean and fresh for you to receive benefit. Okay, so there's a lot of cause and effects going on in every organisation, whether it's production, service, a university, any organisation. That's what cost allocation is all about. I want to bring up Grace, okay? Because there's an exercise here you can take home and think about it. I can show it to you at the end of the lecture. For now, and there's an example I want to make you aware of. We're going to come back to this, but I need to talk to Grace. Because what does Grace do? Grace is my customer relationship manager. And how many of you have a bank account? Put your hand up if you have a bank account. Great. Okay, so put your hand up if you get good service from your bank. Oh, a few of you. Okay, all right. I'm not sure if Grace knows that I'm going to call her. Well, I gave her a hint, but 2 years ago I just called her without notice. See? So am I a profitable customer or an unprofitable customer? Think about that, because that's what we're going to talk about, okay? Whether a customer is profitable or not. Okay? So if I called my relationship manager once in 2 years, what does that say about me? What does that say? Let's get Grace on the phone and ask her. Okay? All right. Do you want me to call Grace?
Yes.
Yeah, okay. Good. 8204. This is real. Many of you want to work in a bank? Then maybe you need to talk to Grace. Okay? Let's see if we can get some sound here. Have we got... Can you all hear that?
Hello?
Grace, can you hear me?
Yes, speaking. Is it Mr. O'Connor?
Yes, it's your profitable customer speaking here. Yes. Look, I'm in the lecture, and I just want to congratulate you on your promotion. You just got promoted, did you?
Yeah.
Okay. I just want to get the sound right here. So I'm talking to my students about what it means to be a profitable customer or not. And can you tell me, when you were a relationship manager, did you deal with many customers every week?
Yeah, for sure. Actually, in my client base, I have like more than 100 of my customers. And for every day, I have like 10 to 20 customers call me and to do business transaction and other banking inquiry.
Wow, you have over 100 you have to look after. Wow.
Yeah, over 100.
Wow. Did I give you much trouble?
not always.
Okay, all right. So is it true that some customers take more of your time than others?
Yeah, for sure.
Yeah.
Some of my customers, they have more specific concerns on their account, and some they just don't go to bank. So yeah, for sure, every customer has different requests.
Right, and so I'm not sure if your bank does it, but do you have some assessment of the profitability of different customers in your bank?
Yeah, because some of some of the customers, they always like to deal with the bank, and they would like to do the investment decision, and some they just want to put the money in the bank and they don't want us to call them. So of course they will have difference.
So the ones that don't want you to call them, are they more profitable or less profitable?
You mean my customer want me to call them? Is it more possible?
Yes. Are they more profitable ones or less?
Yeah. If they will have some investment with us, then we will see it's more profitable.
Yes. Yeah. Grace, I know you're very busy. What is your new position? You've just been promoted. Is that right?
You mean my position? The name of my position?
Yeah. You're promoted, right? Is that correct?
I'm still a female relations manager, but just senior female relations manager.
But you're no longer my relationship manager.
Huh? Sorry?
You're no longer my relationship manager.
Yeah, I will have other clients to take care of Mr. O'Connor, your account. But if you have other things you want me to help you, can still contact me. I'm okay.
Yeah. Grace, thank you very much for talking with me this afternoon. And
thank you.
Yeah, the class are really, they don't believe I call you, but that's okay. Grace, thank you very much. Give Grace a hand. Thank you, thank you. Okay, so there's Grace. See, what we're talking about here is it's customer profitability. Grace had how many customers that she had to serve? 100, and there's a dozen every day. Some take more of a resource, some take less of a resource. Okay, so in terms of using her resource, some you may see more profitable than others, but it depends what they're asking for. So what I'm going to talk about now is how we apply activity-based costing, that idea to, if we can apply that to different customers, then we can make better economic decisions about, well, should we be looking after all our customers in the same way, or should we give special treatment to some of them and not others? You with me? There's some of the economic decisions we need to think about. So let's, thank you, Grace. Okay, we're good here. Let me turn that down a little bit. Okay, we've got, so I've skipped over the cost allocation. I want to really move into customer profitability analysis. So I really want you to, when you go out of this lecture, you have a really good sense of how valuable it can be. This can be a very value-added part to what organisational activity. Okay. Normally, you understand the profit and loss statement, right? So if I asked you to draw it, you could do that without thinking, right? You know all these parts, yes? You know, and traditionally in MA1, at the start of MA2, we talked about activity-based costing. And that was all about applying a more finer allocation of costs using a more finer basis, so we get a bit more accuracy for decision making. Last week I said it wasn't the medicine, right? You remember that? Okay, what is customer profitability analysis? Well, in the same way that activity-based costing is about labour, materials and overhead, customer profitability analysis is just about understanding what is driving selling, administration and financing expenses. Think about it. Remember what I said earlier, cost-benefit analysis, cause and effect, benefits received. Do you not think that when sales are spending lots of money in promoting and getting customers, that there is a cause and effect there? And that if Grace is spending more time with one customer, then maybe more of Grace's salary should be allocated to that customer and not to another one? Isn't that right? If we're going to apply the idea of cause and effect or benefits received. So it's the same idea. It's the same idea. We want to, if we can more finely allocate selling, admin and financing to different customers, maybe we can make better economic decisions about which customers we should keep, which ones we should give special promotions to, or which ones we should charge, have a fee, bank fees. Yeah, okay. So customer profitability analysis allows managers to do the following. So formally, there are 4 things that customer profitability analysis can allow managers to do. All right, continuous improvement, acquire new customers, setting prices on cost to serve, and value added. So here's some examples of customer profitability analysis and what it allows managers to do. And I could ask you to think about, these are very small. Do you have this list in front of you? It's very small, isn't it? Okay, you just take your glasses out, it's okay, all right? And for me, take my glasses off, then I can see it, all right? So here is those 1, 2, 3, 4, 5, 6, 10 items underneath those 4 areas. So you may want to think about some of those areas are to do with new customers. How do we acquire new customers? Some of these are to do with, well, we just want to improve. So for example, manage each customer's cost to serve to a lower level. That's interesting. So the university takes in 2,000 new customers every year. And maybe we want to think about, well, how much does it cost to admit every student? So we get a sort of admission per student type standard. Okay, why would we want to do that? Maybe we want to save some costs, headcount. So we tell the admissions office, oh, that's your standard last year. You had 10 people looking after 2,000 admission documents, more like 50. Okay, this year I want you to do the same with 10 people less, okay? And so therefore they've got to improve their productivity by 25%, you see? But it's very hard to get in that conversation to start with if you don't have some kind of ratio to begin with, you see? Every organisation wants you, if you're on the front line, to do more with less. But that communication is helped better if we have some kind of calculation. It's an engineering standard that is input, output. How many did you serve? What is your salary? So what is the cost per serving? All right, so that's what we mean partly by continuous improvement. If you can work out how much it costs to serve customers, then you can set benchmarks and use that in the communication with people in the organisation. All right, you've already got these, so you just have to, you're trying to find it and put the number next to it, are you? That's good. I'll keep you busy in the lecture. All right? I can give you the answer afterwards, so don't madly write everything down. Value-added service management. You see, number 4, if we know the cost per customer or how profitable some customers are, that may help us think more about the customer mix. And so HSBC, they talk to Grace and they do all the calculations, and out of that 100, there's only 10 that put in, $10 million investment plus, but the other 90 do not. I'm one of the other 90. All right, then they may come up with a strategy that says, okay, all these relationship managers, you need to move your customer mix to 85-15 rather than a 90-10. Try and get 15% of your customers having $10 million of assets per head. Are you with me with that? So a lot of this customer profitability analysis is first and foremost, it's about creating some metrics or standards. Then you can use that for planning, use that for strategizing about improvements in the future. You cannot change the past. You cannot change costs incurred in the past, but you can make decisions about how you change your strategy in the future. Do you deliberately want to not serve some customers? Okay. All right. So some banks will say, okay, last year, if you have $1 million, then you have a relationship manager. Oh, in June 2012, going forward, now you need to have $1.5 million. What happens then? Well, out of those 100 customers, maybe the bottom 15 drop out. Now you've got 85, but you still got that 10% at the top, and so then your percentages change. You see what I mean? Okay? You with me on that? At the back, are you with me, or are you still asleep? Okay, good. All right. So we have, these are the different things we do with customer profitability analysis. All right, here is a real test for you. Did you get that down? The classifications? Great.